I would truly not do these founders justice by doing their intros. That's why we have excellent moderators joining us today. Karim Gillani, thank you so much for being here. And to toot your horn a little bit, Karim is the co-founder and general partner of Luge Capital, a fintech-focused venture fund based in Toronto and Montreal. He's a long-time fintech operator. Karim led corporate development and M&A activities for PayPal in Canada and at Zoom, a leading cross-border remittance company that was publicly listed on the NASDAQ in 2013 and subsequently acquired by PayPal for $890 million. Karim is a Kauffman Fellow, a charter member of the C100, a board advisor for Village Capital, a program that supports diversity and equal opportunity in the startup ecosystem. Karim, I feel I'm out of breath just talking about your bio. Welcome. Thank you so much for being here.
Thank you, Lauren. It's a real pleasure. Gosh, that bio makes me sound cooler than I actually am. So I appreciate that. It's a pleasure to be here. I'm going to be talking about alternative assets, and we're going to be joined by Sean and Sophie shortly. Now there's Sean, and there's Sophie.
Hi,
all right.
Hi, Sean.
I'm glad that we could all make it in. So before we begin, maybe Sean and Sophie, you could spend just a few minutes just introducing yourselves.
Sure, Sophie, go ahead.
Well, I'm the founder of co-founder of Wondeur AI. My partner in crime is Olivier Berger. Team is based in Toronto. Magnificent team. I should say also Calgary, because we have one of our team members there. And with remote work being possible now, we soon will have a team member in St. John, Newfoundland. So very Canadian, like almost border to border, ocean to ocean. My background is economics and art, of course. We'll talk about that. And Wondeur is basically bringing light into the shady world of the art market and making it hopefully more accessible to more people in the same through that. Yeah.
Yeah, and I'm Sean Green, co-founder and CEO of Arternal. We're a vertical business automation software for leading art dealers, auction houses, soon to be collectors as well. And our focus is making the business of art dealing more efficient. And right now, most of the companies are still operating on pen and paper, Excel spreadsheets, stitching together ways to work with inventory management, or a database, as they call it, as their prime focus of tech. And we introduced client relationship management tools into the space in 2015. And we've been, going hard at the market, trying to make sure that they have best-in-class solutions that exist outside of this world. Salesforce has a good playbook to follow, as well as some of the other interesting startups that are around in the space. And we're basically, giving the tools that have been long needed in the market to these dealers, and giving them better ways how to look at their business and understand how to operate it by leveraging data, at the center of what they do, and having a central repository for information to strengthen their relationships with their clients.
Very cool. Thanks, Sean and Sophie. I had the pleasure to meet the two of you before this panel and learn a bit about your businesses, and they are incredible. And we're here to talk about alternative assets. And these days, when we hear a phrase like that, we tend to think of cryptocurrencies or DeFi protocols. But today we're talking about a slightly different topic, art as a different asset class to consider. But before we do that, the most important question of this panel to break the ice, my favorite question as a Canadian to the both of you, what's your favorite Timbit?
I'll tell you right away, it's the one that shows up randomly on the kitchen table. And we've had those, benefactors. Everyone knows these people who actually drop a box of Timbits in the kitchen, in the co-working space. And I think that's like
Nice.
a gift of God.
Nice. And what about you, Sean?
It's simple. It's like the simple, glaze, as long as it's super fresh. I just love that simple glazed Timbit.
Nice.
pop it in and, you know, start chewing and you're on your way. It starts in the morning.
I'm a sour cream glazed man. So look, let's jump right in. You know, I personally buy my art from Amazon, from Wayfair. I'll even admit that I've bought art from IKEA. So I'm not exactly a connoisseur. And I imagine there's a bunch of people in the audience who are in the same boat as me. And so I was hoping that, you know, the two of you can maybe just spend a bit of time giving us the for dummies version of how the art market actually works.
You want to take a shot at it, Sean?
Sure. I'll go first here. Thanks, Sophie. So you have the primary art market, and then you have the secondary art market. And the primary is like our clients. Actually, we have clients in the secondary, and I'll explain that. But the primary are like your art gallery that you walk into. You know, you walk in, there's art on the walls. That art on the walls is primary market. Collectors come in, they buy that work. How does that work end up in the secondary market? Well, they're looking to sell, right? And, you know, death, divorce, and there's one other D that you know, constitutes reasoning for selling a work. And you have auction houses like Sotheby's, Christie's, Phillips, who's a client of ours, that when you're ready to sell, those are the primary places where you go to sell. And that's how you see these, you know, next level numbers and valuations of art go up, you know, over time. And so the way how those valuations increase, you know, as they're privately held is, you know, you have a museum show, or there's a very, you know, astute, you know, tenured collector who's on the board of MoMA who's buying your work and things like that. So that's how it appreciates over time. And as a collector, you want to ensure that you're getting all the knowledge and you're participating in the space, which is like the pandemic was a thing because you couldn't trade information spontaneously in person, right? And Sophie probably knows this very well. And so, you know, being in person is a real thing. And that's where people are like, oh, did you see this artist? I saw this person at the show and they were buying a work, and right, you get this, you know, frenetic activity, and that drives the valuation of the art over time. And Sophie has ways how I'm sure she'll say how Wondeur can help you track and understand, you know, valuations as well. But that gives you a quick snapshot into like the primary market, secondary market, and then how valuations happen. And
just to add to that, everything that Sean said is perfect. Just adding a few myths, maybe busting points of information. There's one thing that a lot of people believe is true that is not, which is real good art, valuable art starts at, I don't know, $100,000, $1 million. And if you don't own something that's super expensive, it's not valuable. And that's completely wrong. A lot of people who are in the know, people who are artists or working close to artists, so they might be broke, but actually they know that putting $1,000 in a piece of art that is created by a very serious artist that has a career is actually easily a good investment, you know, because if you know that this artist is growing, if you know that he or she is backed by a good gallery, it means that this $1,000 can go a very long way. So you don't have to be a millionaire or billionaire to collect good art. You don't have to spend tons of money to actually build a meaningful collection that actually appreciates over time. And a lot of people have understood it. Some people in the millennial market have understood it, and that's why millennials are so active in the contemporary art market.
Very true.
It's a great way to build wealth. Yeah.
Very true. Like the Basquiat artwork that sold for $110 million. I think it was one of the auction houses, you know, a few years ago. I know people who are in their 70s who bought that work for $1,500 or $2,500.
Wow. Yeah. Amazing. So this is actually a good point. So let's, as we're talking about the economics of art, let's talk about it as an asset class. I mean, we're considering here alternative assets, and you know, with low interest rates these days, we see that the fixed income markets and the bond markets are not yielding much in terms of returns, and so we're seeing, at least in our business, we're seeing investors looking for alternative assets to invest in. And sometimes those are alternative lending vehicles or bankruptcy claims, meme stock, GameStop stock. And so I wanted to get your point of view of, in this low interest environment, is there a big push for investors to look at art as a new asset class to consider? And really, should art be a part of everybody's portfolio?
Look, Karim, the thing is, it's already a part of a lot of people's portfolio. The thing is, you might not know it is. So, and even for bankers and wealth managers, it's hard to know, because typically that's not something they discuss with their clients. So you can take for granted that anyone who is affluent has art in their home. And a large portion of these people don't know that it's actually valuable. They don't know if, and they don't know that it is. So the thing is, when you look at the proportion of art as part of wealth, it's up to 10% of wealth already in the upper echelons of wealth. And if you look at the next gen, it's up to 30%. So it's a huge part of wealth. The thing is, today, it's an asset that is not equipped with tools, with data, that makes it manageable as an asset. Meaning the only way you can get a sense of whether there's a risk on this asset or whether the value might go up or down in the long term is relying on an expert who is going to produce an expert opinion. And you will have to trust that person, because there's no way you can verify what they're saying. So it's a very uncomfortable place, because it's an asset where the asymmetry of information is massive between experts and non-experts. Yes, it's an asset. Is it an asset that behaves like others? No, it doesn't behave like others, because it's not equipped with this data. And it's also an asset that actually has this double dividend of pleasure and investment, because it's not a bill you put on your wall. It's something that actually brings you energy and makes you happy every day.
Got it. So it's interesting that you say it's already an asset that people are investing in. It's just folks like me don't get that kind of exposure because I'm the guy buying art from IKEA. But recently the art world has seen, I guess, a bit of a shakeup with respect to non-fungible tokens. Sort of becoming more popular at the start of this year. And, I'm sure it was inevitable that I was going to ask the two of you about NFTs. So I thought I'd ask each of you, is this a fad, or are NFTs here to stay? And if so, does it have a place in the physical art world?
Totally. I think it has a large place in the physical art world. Ownership, provenance has been a thing in the art world, where, was this piece really a Da Vinci? Like, do we really know for a fact? And, when you can, tie ownership or COAs, or certificate of authenticity to a particular physical good, right? These NFTs have the ability to connect the characteristic and ownership. Conceptual art and NFTs are perfect, right? Like, we all know the story, and I've talked about this several times, about Maurizio Catalan's banana that was duct taped to the booth at Art Basel. And, my team and I are there, we're seeing this banana. People are buying it for 120,000, 130,000. And I think it was an edition of maybe 3.
Yeah.
Now, this gives you the right to actually, you get a piece of paper that gives you the right to recreate that in your home. So I could have a banana like underneath my Murakami right there with duct tape. And I have the authority and that ownership. Now that's like an NFT, right? It's like, you have this. And the thing that I think is also really important about this space is the ability that you can monetize each sale after. I think that's really key, as the creator, right? So as it continues to sell or resell today, artist resale rights are slim to none, right? And if you're an artist and you'd like to be able to continue to monetize or see the upside of what you've created, there's no way for you to do that. So these ballooned auction records and things like that happen, you're like, oh my gosh, the artist must have made so much money because look at what their work sold at, 10 million, 50 million, 100 million, nothing, right? That just goes between the auction house and the secondary market and where. So I think there's a lot of room for NFTs in the art world.
Right on.
Here, I think NFTs are actually a massive opportunity, especially in terms of value redistribution. As you mentioned, Sean, the royalty system that goes with NFTs is massive for artists because it's finally an opportunity for them to see, to get a piece of the cake when they're successful. There is a bubble effect for sure. Some of the values have already crashed, but it doesn't mean NFTs are not here to stay. And it's like a new medium as well. You know, it's a lot of digital artists that didn't have a market before are starting to see a market now for their work, which is a huge opportunity for creativity. So it's like the invention of photography. It's like all of a sudden you can sell something that used to not be something you could transact, tradable. So it actually helps people who were creating in the digital field to actually monetize their creativity, which is absolutely massive. So for the art world, it's a great playground as well to think about redistribution of value, think about ownership, think about the future of that, and certification for sure. And eliminating a lot of those problems around provenance, as you said, Sean, and the traceability of a piece.
Awesome. Well, this is something that's certainly top of mind for me. As a fintech investor, we've been starting to study NFTs a lot more alongside the world of crypto and DeFi. So I appreciate your perspectives. We are out of time, but I could talk to the two of you for hours. This is, for me, it's a fascinating world as we explore different asset classes. It's something that we're spending a lot of time on right now as well. But we're out of time for this panel, so I appreciate your perspectives, Sophie and Sean. Thanks for joining us.
Thank you, Karim.
And it was a pleasure to learn more about your business. So
yeah, thanks. This is great.
Thank you.